So was the recent move higher in the market nothing but a bear market rally? It sure feels like it after the sell-off today. And from this point forward, our stock market bulls in some serious trouble. What I'm going to do is go over some of the details, talk about the technicals, because being a short-term trader, my strategy is just based on technical analysis, and then go over Jerome Powell, who spoke earlier this week, some of the things that he said that affected the market. So I'm sure after today, most people think that we were just in nothing but a bear market rally. Look at this big move higher. Kind of got met right at the 20 SMA. Nasty sell-off. Almost an inside day, but kind of a lower range day. Closed green. And then we ended up gapping up today. That strength got sold, broke the lows, and it was a nasty sell-off. And not only is this a nasty sell-off, but that is a really big down day on elevated volume, which is not good. And something that's pretty important is we closed back below the 200 SMA on the daily. This is SPY. And this has been a pretty big area of support and resistance at times. Being that it was trading above that, it was a really big area of support, and we closed below that. So as far as that moving average goes, which a lot of times can tell the difference between maybe a bigger trend, we closed below it. So who knows what happens, but just as far as the overall basics, as far as the daily chart, the recent rally, the sell-off, and then now closing below the 200 SMA, the market does look pretty weak. And now let's talk about what kickstarted this weakness. So earlier this week, Jerome Powell spoke, he had a testimony, and Fed Chair Powell had a very hawkish testimony this week, which means that the markets expect the Fed to raise rates 50 basis points on March 22nd. Specifically, fixed income markets now see an 8 in 10 chance the Fed makes a bigger move up in rates this month. Just last week, markets viewed it as far more probable that the Fed would make a smaller 25 basis point move. It's an abrupt shift in the Fed's meeting approaches. So being that there's uncertainty out there and there's the possibility of more rate hikes, not really knowing exactly what's going to happen, the market has reacted really negatively to the downside. So now let's just talk about what could possibly happen from this day moving forward. Even though nobody knows what's going to happen, just using technical analysis to try to figure out what could possibly happen. So as far as today, really aggressive red day. What is the low of today? Low of today is 390.53. So that's going to be the low. So how I look at it as if that low ends up breaking and we cannot hold that, then it looks like there's more room to the downside. And it's not like this low has to break immediately, but just realizing that tomorrow, especially on a Friday, sometimes notoriously Fridays can be weak days. If for some reason there is a gap up and we're trading kind of right around that 200 SMA on the daily, that's going to be a big area of resistance. If we're not able to hold above that, and then this thing starts to sell off again and we get to that prior day low at 390.53, it looks like this could get some second day continuation to the downside. So now to just look at some macro support levels of where the market could possibly go, keeping it very simple. Looking left, trying to find some touch points. So this 388, that was a pretty big area of support. Ended up breaking it, getting back below it, was resistance, back to support again, had a really big move up off that, and now coming back down to it again. So I would think 388 would be a pretty big area of support. If that line is not able to hold, then it looks like we could continue lower right around this 386. Some touch points was resistance, ended up selling off, getting back above it was support. So far we got 388, 386. And if this 386 cannot hold, it does feel like we could test the lows at 374.77. But there's also one more big level that I see before that could possibly happen. I'm thinking 380. So that was just a really big area of support. Look at all this consolidation in that area. But these are just some basic levels. So looking at 388, 386, if we cannot hold those levels, then it looks like we could move down pretty quick to 380. If 380 doesn't hold, then it feels like we could retest those lows. And now this doesn't have to happen in one day. It could take a few days, it could take a week, it could take 2 weeks. Obviously, when it comes to trading and doing technicals, it's taking it one day at a time. What happens tomorrow? And then what happens on Monday? How does the market react? Are bounces sold into? Do we have a strong day? Do we have a weak day? And then just trying to figure it out day by day. And if for some reason we're not able to hold this low, if we happen to actually sell off that aggressively and we end up testing these lows, 374.77, and we cannot hold them, I think bulls are going to be in serious trouble. But we need a lot of weakness for that to happen. But from today moving forward, these are going to be the levels that I'm watching. So that was my opinion and some of the technicals on the recent weakness we've experienced. Is it a bear market rally or is this another dip to buy? Appreciate you watching the video. Feel free to like and subscribe, and I'll see you in the next one.